Today, we're talking about the best stock charting pattern out there to trade with. The best part about this one is that 60% of the time, it works every time. As you know, for real, there's no guarantees in trading, but this is the pattern that I would use or recommend using if I was going back to start again for trading. We're looking at a bullish position on this one. There's literally thousands of trading setups you could use and chart setups you could use. But as a beginner, as you're getting started, the best way to do this is to try to cut out some of the noise and just focus on one or two trading patterns, even one like this to get you set up and get going. And this is one that I have used for the last 4 years to consistently make money in a bullish setup. Here's how it works. Let's get into it. It's called the ABCD pattern. We're going to show you how it works here on Meta, who has been on a run lately. The problem with most patterns is that it's hard to see when it's kind of in motion, and it takes a little bit of lag time for traders to catch on to what's happening in the market. So to do this, we're looking at Meta stock on a daily candlestick chart here in TradingView. And this is the jump that was made here after the latest earnings report. Well, it consolidated for a little bit, and then the pattern started to begin. If we play this here, we're going to see what happens the next couple of days. Okay, stop it right there, film guys. Just kidding. There's no film, guys. It's just me here controlling it. I don't have that kind of crew yet, but one day, hopefully I will. So this pattern starts to go. And this is the part here where it can be hard to kind of distinguish if it's in an uptrend. Maybe you have a couple of days of data right here where it looks like there's 3 green soldiers. That's great to see, but it can be hard to decide, is this really a pure uptrend? What we're waiting for is some kind of confirmation. And in this pattern, this ABCD pattern, we're about to get to the sweet spot, okay? Let's play this one more time. Roll it, guys. Boom, we're in the truck right there. And this is what we're looking for here, okay? Let me finish this pattern one more time and I'll show you. We're gonna put this right on here. This is the sweet spot right here. If you remember, this is the key area right there. This is what we're looking for, and I'll explain it in a second why. Let's finish up this pattern right now and play it to the end. Boom, boom, boom. We get to keep going up higher, ticking higher, and that's our pattern right there. So why is this area so important for an ABCD pattern? Well, here's how it works, okay? Initially, like we said, we have this stock running up, and this is kind of the hard part to see. This run up here that we have in this first area, this yellow line, we're going to make that a little bit bigger, thicken this up, make it a nice green line, green for money. We're in the money right there. We're going to brush this in. This is going to be part A. Boom, pink line, that's A, okay? So with A right there, we have a run up in the stock price. And again, it's really hard to catch this sometimes. Sometimes it's happening too quick and we're not really sure if we're going to take a position. It goes up for a couple of days, then pulls back. It goes up, kind of meanders a bit, kind of goes kind of sideways for a bit, and it actually breaks out again. And maybe you don't have time to make your trade then. The best part about that is that in part A, that's okay. You can miss part A and you can still profit from this trading setup. It's super simple. We're keeping it very simple today for you. What happens next? The stock goes up and kind of has this topping out area. When you see a doji candle like this, right here, it's an indecision candle. Then it's followed up right by a candle right here with a long upper wick and a small body. Another one right here saying that we're trying to push the price higher, but it's not moving any higher. And this is part of part B here in our ABCD pattern, right? Is right about here. And I'm just going to circle it right here for you. It's this kind of area where there's indecision and it looks like the stock is about to top out. This is great for us because, as we know, there's A, there's B, there's part C coming up, where you're going to get in and actually make your trade. And then part D is where you're going to go ahead and profit. So we want to see this kind of topping out and consolidation area here at the top end of this bullish run. When we see this, this is when we can start looking for actual technical levels and get a little bit aggressive with our trading. What we want to see is this topping out area up here. And then we want to see the stock decline, okay? This decline here, let's draw it in. Let's draw it in right here. This decline that we're seeing right there, we'll put it to there and we'll make this one red because it's declining and it's down. So this decline, that is part of part C, okay? This is part C. And the key here, okay, the super important thing is that it goes ahead and it makes a higher low than previously over here. So we had this low down here around 228, 229, right? There's kind of the marking, the baseline level. With this A, B, now C part of the pattern, we want to make a low, but we don't want to go back down to this kind of 230, even this kind of area here, 243, this top area here. We want to be above these areas. And if we can do this, which we saw here, we saw it hit at 260, and we have kind of this influx of volume coming back. This is kind of a declining volume as we're dropping lower. And then there's a little bit more volume picking up as we kind of move higher. That's a good thing to see. Ideally, we want this candle and then this next one to kind of be a little bit higher than that to make it a perfect pattern. But even still, we see that this makes a higher low. It's going to catch here, then bounce higher. To me, and this pattern, the way that it works is that it goes up, it consolidates and comes back down a bit. It makes a higher low, and then it starts to kind of regenerate. And the psychology here is crucially important, okay? What's happening right here is that in this area right there, people are taking profit. It's been a crazy run up in the stock after earnings. Great, made some cash. People are selling off and dumping shares to take profit off the table. That's what's happening, okay? The stock is still in an uptrend, and it's still a good stock and it's in play. But if you don't catch it on this way up in part A, you're looking for part B on the dump. Write it down to part C, and then we're looking to get in right at part C. When you see that that floor is established, maybe you can catch it on the day it is. Maybe you catch it on the next day or the day after that. It's going to bounce off of this line, kind of like a ball bouncing on the floor, and then make the move upwards again into part D. And part D is this final kind of trudge higher, and this kind of stock is it's unknown where it's going to end up. We could zoom out and take a little bit of a closer look technically, but it's on the path higher. So even if you miss this whole part in part A, going from 230 up to 270, that's okay. You're not going to catch this every time. It's hard to see in the moment. You wait for part B, you wait for it to pull back. And then here at that 260 area in this example, this is when you could buy calls. You could sell puts. You could do some kind of a credit spread on this particular stock. You would want to, if you were going to buy shares outright, you could do that here at this point as well, and then kind of set your stop loss maybe at this technical level at 252 with this big candle right here, knowing that it bounced off here. It's a good chance it's going to go higher in the future, okay? So B is to take profit. It declines to part C, and then we have this final leg here of part D, where again, it's going to run higher, and that's probably the world's worst D right there. It looks more like a big kind of lopsided circle. That's okay. That's where you're going to make your cash. You open the position right here, you ride it up to profit right there. And it's great for beginners because again, you can miss this whole section in part A. Just keep watching for part B and C, and then make your move and make sure you have a stop loss, of course, and then ride the profits up to part D. I've done this on stocks like Tesla. I've done this on stocks like Meta, Apple, Walmart, the S&P 500, QQQ, the NASDAQ. It does not matter what the stock is. It's about finding this pattern and being patient for it. A lot of times too, when I make the mistake, it's that I'm being way too aggressive and I'm not waiting for the actual kind of B and C to play out. I'm hoping or guessing that it's going to play out. And when it doesn't, then I'm kind of like in this area right here thinking, okay, maybe it's going to pull back here and then move higher. If it doesn't, and it kind of just keeps dropping down low, that's when you can get into a little bit of trouble. You want to be patient with it. You want to make sure you see this baseline and then the bounce higher to reconfirm that this uptrend is now in play again. That is the ABCD pattern for you. I hope you guys understand this pattern and how to find it. You can find it much easier in a candlestick chart versus a line chart. Not to say that you can't see the line chart, but it's just easier to break down in the candlestick chart. So I'd recommend starting with that if you're new, but keep it simple. Keep one pattern at the beginning. This is the one that I kind of honed in on when I understood it. It made sense to me as a beginner, and I've used it ever since for the last 4 years. If you got some value to this video today, please like this video and subscribe to the channel for more everything from stock investing, trading strategies, breakdowns of how you can make your options trade or just regular buying and selling of shares here on the channel. My name is Andrew. Again, thank you for being here, and I will catch you on the next one.